Hey guys, this is a market update. Bitcoin sticking above 30K. This is a really important one because we are at major resistance right here. And I want to look at how the next 12 to 18 months is going to play out for the Bitcoin cycle with a lot of data on that. And also the economic cycle, because we're at an inflection point and what we are waiting for is one piece of data to essentially take away the whole inflation narrative. And we're going to look at all of this data right here in terms of what is outperforming right now and what is the space to be in my opinion. So we're going to look at that in this video and timestamps for that below. Coming to the Bitcoin price, firstly, if you are a very short-term trader, obviously buying resistance here isn't the best move. We're at major resistance at 31K. We tested it once right here, as you can see. We've tested it again. This is actually the highest weekly close of the year. But, we had a 3-month period where we were selling off here, and then the ETF news just drove us up from cycle low to cycle high. So 25 to 30 in a week. It's obviously a big move, and a lot of short-term holders are in profit. They'll probably have some profit taking there. However, medium term, 12 to 18 months, what we'll look at is, I think this is a new bull market for Bitcoin. And so what I would be doing short-term trading here is just buying weakness. So if you see any weakness in the price, weakness coming off maybe to mid levels during, this part of the cycle, right, 25 to 30, any weakness has to be bought in this market environment because of where we are on the cycle, which I'll show you that data right now. If you're a trader though, deposit bonus on Bybit up to 30K, link in the description for those details. So the bearish case for the market generally is that inflation is just still too high, which is correct if you look at the data. However, you have to look forward here and understand what's going to be happening in the next part of the cycle. So this is a tweet here to say, what is the case for higher for longer? The Fed say they aren't done with interest rate hikes and they're going to keep going higher. So is that an issue for Bitcoin? How is that going to play out? Inflation is too high. He's talking about core PCE, right? What the Fed really looks at, which fundamentally is the labor market. They essentially want to see the labor market weaken and soften and more people unemployed, because that's when they know the real underlying inflation in wages is smashed. Everything else in the market, everything else is not inflating in price anymore. Everything else is showing a huge deflation and, demand just dropping off everywhere. But they want to see, the Fed, they want to see people unemployed, unfortunately. The only thing that I believe is safety right here is growth. And I don't mean speculative growth like meme coins and nonsense and all of that, rubbish, but actual things with real growth that are actually growing. They are actually a safe haven in this environment, not the cyclicals, not what did well back 12 months ago when growth was falling off, because in a recession, all of those stocks are going to be suffering from margin compression and, lower earnings. That's not where you want to be as an investor in a company that's making lower earnings and suffering yield compression and has a terrible recession ahead of it. That is not where you want to be invested. That is not safe. Right, and so they're going to maybe increase the dividend yield that they'll be giving. Again, that's actually a defensive move from companies that want to try and attract as much investment as possible. They have nothing else to do. They have no growth. They have to pay dividend yields to try and up the price of their stock. It's a defensive move. It's not safe haven. The market is changing. Growth is the safe haven, ironically, to actually save the value of your assets during the next part of the cycle. That's what the market is saying. Maybe they're wrong right now. Maybe the timing is different, but that's what all of these asset prices are saying right now. Just to show you this economic weakness in figures as well as what's happening. This is a worrying part of the economic cycle that we're in. This is French retail trade, absolutely nosedived. This is Eurozone PMIs. Again, this is a leading indicator to a lot of economic indicators right here. Lowest level since May 2020. And you can see down in 2008, that recession, we are heading there right now. And the worrying thing is that central banks are still out here saying, no, we're worried about inflation, and growth is too high for us. We're trying to smash the economy and increase unemployment. So, if they keep going that way, things are going to get obviously very, very bad and require even more stimulus on the other side. So they're playing a game of chicken right now. They know this is happening, but they have to keep heavy on inflation because they have to get that under control before the next part of the cycle with stimulus, which must come if economic data continues to be this weak. These are leading economic indicators, which I've showed you a lot of times before. Each time previously we've got down to this level has been a recession with higher unemployment. Why would it be different this time, considering that we may even not be finished here? Because liquidity is starting to turn. It looks like, through the back door, through what the Fed is doing, through the BTFP, maybe they're just starting to pump liquidity in. Maybe that's turned things. But for right now, we don't know. And all of this economic data is lagging, so it could get worse, obviously. And the main thing here is unemployment, especially in the States. This is initial jobless claims. You can see this is in an uptrend. It's still way low. It's still at cyclical lows. And so the Fed aren't going to stop. However, we're just seeing this in a very slow uptrend. So if this continues, this will give the cover for the Fed to actually change and flip and cut rates later. But that's not going to be happening now until the job market is much looser than it is. Otherwise, they just won't do it. But it is going that way, as you can see. So all of this economic data is showing us that at some point in 3, 6, 8 months, something must be weak enough that it actually turns the Fed the other way. But for right now, it's not really weak enough. There's not really a emergency for that to happen. And that's what the Fed really needs in order to cut rates, is some sort of emergency where they have to support the economy. That emergency isn't great, of course. If the Fed has to cut rates because there's some emergency, that means that unemployment is too high and economic growth is much lower than what they would want as trends. So that's not good news. And so the real economy looks like it's suffering. However, for markets and Bitcoin, that turn, eventually is getting priced in right now. So as we can see here, MVRV down at lows, and we've climbed out of the low point. Each time we climbed out of the low point before was essentially the bear market bottom, moving in over years into eventual, bull market tops. So this right here, we're still not overpriced at 30K, in my opinion. We are just climbing out of the bear market. So a long way to go. So as an investor, dollar cost averaging, even at range highs technically right now, don't think it's a big deal. We also have net unrealized profit and loss. Again, just showing us, the cycles. So bear market bottoms and bull market tops. So we're looking at the blue line here. Each time the price reaches a low for that cycle, you get this kind of capitulation as the blue line comes into this field. And then as the price marches upwards slowly, you just climb out into hope and optimism and belief, and then euphoria at the top. So we had euphoria just around the top of the last cycle. Blue line has come all the way down to capitulation, but you can see we've very steadily climbed out of this now, and we've climbed out of this every previous cycle before, and it's usually a very good indicator to show potential bear market bottom and climbing out. So again, recovery from the bottom, but nowhere near some sort of top if you're looking over medium-term timeframes. Also, some data here from Glassnode showing us that it looks like the regime has changed from, ultimate bear market into something different. So this is why I'm of the opinion that weakness is to be bought. Weakness can still occur in this part of the cycle, both economic and Bitcoin. They're both the same thing basically at this point. So this part of the cycle, weakness can still occur because this is not the economic bull market where you have the Fed cutting interest rates and pumping everything to the moon. It's not there. In that type of market, it's just buy everything because everything's going up. Right now, you're still in a period of the market where a portion of the market has changed to say, we're actually buying now and we're good for the next 2 years and we'll see where it is in 2 years. But there's a significant portion of the market that is still happy to maybe trade short term here and sell things because they're unsure. So what you can see here is that this is short-term holder realized price. Back in the bear market, all under the price, right? So this is showing us that essentially a loss-driven regime of unrealized losses down here. And we changed at the start of this year. The market landscape changed, and the market's opinion on what part of the cycle we're in seems to have changed very quickly. And now it looks like we are within an uptrend. However, there is some weakness still coming into the market. So we bounced off the short-term realized price here, and then we actually came under it here and kind of bounced again. So there is weakness, but I would be buying that weakness given that I have a medium to longer term time frame, because given the part of the cycle that we're in. So buying weakness here if it comes, and there are opportunities to do that. This is where we are in the cycle. It's a bit of a mess, this one, but if you can see, the blue part is how long it was in the bull market. So bull market measured from cycle low to cycle peak. And then the red part down here is the bear market measured from cycle peak to cycle low, the next cycle low. So what I want to highlight here is just how long this bear market has been in terms of from the price peak down to where we are now. In fact, it takes the price peak in 2022 right here. In my opinion, the kind of end of the actual bull market was this peak right here. And then this secondary kind of double top was just the unhinged monetary policy from central banks keeping interest rates way too low. It's basically the Fed and the fiscal stimulus just pumping everything. So we had a double top here. But you can see this bear market has been just hideous in terms of its length as well. And so we are, if we assume 15K was the low, we are coming out of it here, but nowhere near the length of previous bull markets. And so in this regime, it's more of a grind. You can see that we can argue that the market has been within a transitional period for about 221 days. Past transitional periods have lasted between 459 and 770. So that would give us another 8 to 18 months until a new market all-time high. So all-time high, obviously not there yet. You need that real bull market, and we're not there yet. And so for right now, it can still get weakness, but considering 18 months time could be a new bull market, any weakness, in my opinion, is to be bought if you just have a medium-term time frame. Short term then, yes, from a technicals perspective, buying resistance is difficult. However, if we take a medium-term time frame around 2 years, this is really what we're looking at, which is potential to just grind higher or potentially sideways. According to Glassnode data, you can see here we're just entering this part of the cycle again. If we are to take the 15K as the low, the framework would suggest a price range between 20K to the downside and maybe 45K to the upside over this period. But, it could be another while, like 12, 18 months before we actually get pushes to new all-time highs. That would really, for me, coincide with a new real economic bull market as well, which has to play out because we have to go through the low of the cycle in unemployment, the high for unemployment first, before you actually can get governments that are comfortable maybe supporting growth again. So technically, yes, a resistance zone here, but you can just see fundamentally the economic cycle has changed and Bitcoin is pricing that in. And so, as I said, I'm a big buyer of any weakness when it comes. If you're a trader, check out the deposit bonus on Bybit up to 30K. Crypto investor course linked down there as well. 300 plus videos on trading professionally, everything about crypto and private Discord groups as well. Check it out via the link below. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.